As companies expand overseas, it's not uncommon for local payroll departments to be working to completely different reporting and compliance standards, using widely divergent systems and processes. I'm joined by Barry Flanagan and Patricia Khalifa from Immedis, which helps businesses get a global understanding of their payroll and employment tax obligations. Barry, just how much can payroll requirements vary from country to country?
Well, the basics remain fundamentally the same. You usually have a gross pay, deductions, and then net pay. However, once you get into the detail, there is just a huge variety. So you go from regimes which actually don't deduct tax at all, like Saudi Arabia, to regimes that have a flat tax, like Bulgaria. In Belgium, for example, accountancy firms won't actually process a payroll because it is so complex. There are such a huge amount of social insurance deductions there. You have to go to a very specialised firm. France is just about to bring in a system whereby they actually withhold at source. Previously, it was quarterly withholding in arrears, and Singapore would have also had arrears, but it's the following year that you pay your tax. So while broadly they all follow the same pattern, the variance between jurisdictions is enormous.
And with all these varying reporting and compliance standards, there's no easy way for companies to get a global understanding of their payroll.
Exactly. I mean, typically what we see is that organisations deal with multiple vendors or suppliers in each different country that they operate in. And what that brings is a lot of complexity. Each different country and each vendor that they work with will have different reporting formats, different standards of how they supply information. While that might be okay on a local level for regional or global level directors, it's a real headache to make any sense of that information. And what happens is the payroll team then has to spend huge amounts of time unpicking that information to make sense of what's actually happening at a company level. This is a big issue because the payroll team have a finite amount of time to play with. The payroll calendar can't change. Information has to be supplied at a certain time. It has to be processed and reviewed and checked. And payments need to be made to people's bank accounts at the same time every month because they've got their bills to pay. So a lot of time being spent trying to make sense of information from lots of different countries is just time that a payroll team just don't have.
So how does Immedis unify all of this data and give companies a centralised global understanding of their payroll?
Our global payroll platform, iConnect, is a cloud-based platform, and it integrates with organisations' HR and finance systems so that data flows securely into our software to manage the payroll. The platform is a payroll management software tool, but it's also a business intelligence platform. And what it does is it consolidates global payrolls across the world into one single view, giving single oversight into what's happening in any country around the world. What that means then for a CFO is that on a single dashboard, they can see the overall company's gross to net pay, they can see employer contributions, pensions and healthcare at a global level. And what that really allows you to do, because it's standardized on a single company currency, a CFO can actually see in real time what's happening in the business from an employee and payroll perspective.
In the second half of this interview, Barry and Patricia explain how Immedis robotic process automation is giving payroll departments 2 days of time back every cycle. So click through to watch that video now. Thanks for watching, and please subscribe.